Hello, traders, and welcome back to a new episode of Beyond the Charts series. I hope you had a great trading week. We're hitting the key events from this short week, September 23rd to September 26th. I'll go day by day, explain each in simple terms, what the numbers mean for the economy, and break down the market shakes on stocks, indices, gold, and FX majors as always. The big theme this week was strong US data, so GDP beat, home sales surge, which contrasts with steady inflation and dovish Fed vibes from Powell. Now, the cut odds for November hold at almost 85% chance for another 25 basis points. The markets loved it, stocks at records, and gold stayed firm while the USD was mixed. So let's dive in. Let's start with, okay, so Monday we had nothing, no high impact news on Monday. So we start with Tuesday, September 23rd. We had in Japan, we had the autumn equinox, meaning that markets were closed in Japan, no Nikkei or major JPY moves. Just another quiet day in Asia, thinning liquidity, but no big disruptions. All right, so the next one was the S&P Global Manufacturing PMI. The previous reading was at 53 points. The forecast was at 52.2, and the actual came in slightly below the forecast at 52 points. Now, what does that mean? It means like there's a slight miss, which is the 0.2, but it's still expanding because it's above 50, all right? Factories are chugging along modestly with new orders up, but tariffs are weighing on costs, which shows resilience despite the slowdown signals. All right, how did it impact the market? Stocks and indices, the industrial stocks were mixed. The Dow was up 0.2%, the S&P stayed flat as no big surprises were there because, as I said, it was a slight miss. So no big deal, it didn't move the market, the gold stayed neutral. And the USD had a minor dip of 0.1%. Other majors like the Euro USD gained 0.1%, GBP USD stayed flat, and USD JPY lost 0.2%. The next one was S&P Global Services PMI. The previous reading was at 54.5. The forecast was at 54, and the actual reading was at 53.9, which is a slight, very tiny miss under the forecast, but again, it's still above 50, so it signals expansion. All right. So what does it mean? As I said, it's a tiny miss, but there is solid expansion in the services sector, which is the economy's backbone, holding strong with employment and output gains, offsetting manufacturing softness. Okay. How did it impact the market? The Nasdaq went up 0.3% on services strength. Overall, indices were up 0.2% after this release. The gold went down 0.1% because of the risk on mood. FX majors, mainly the USD stayed steady, and the majors were not changed much after this release. And then we had the speech of President Trump at the UN General Assembly. So Trump blasted globalism, urged sovereignty, and criticized migration and climate policies, and said the UN isn't living up to its potential, touting America first while warning allies on trade. Okay, meaning like global trade, all right, or international trade. So what does it mean for the markets? It reinforces trade tensions and tariff risks, potentially inflating costs, but the rhetoric still is familiar. No new shocks from Trump. The market impact of that speech was as follows. Initial jitters in the stocks and indices, the S&P lost 0.3% intraday, but recovered flat on no new tariff relief. The gold went up 0.4% as GU hedge amid uncertainty, and the USD gained 0.2% on tough talk. Euro USD lost 0.2%. GBP USD lost 0.1%, while the USD JPY gained 0.3%. And then we had the speech of Fed Chair, which is Jerome Powell. Okay, Powell highlighted a challenging situation with upside inflation risks from tariffs and downside employment risks. Slowing labor prompted recent cut, but baseline outlook is stable, so no preset path for the Fed. They will stay data dependent. So there was a balanced dovish tone, and they're watching the data closely, shifting focus to jobs from inflation to jobs now. Like in the past period, the main focus of the Federal Reserve was at inflation. Now they're shifting focus to jobs, keeping easing on the table without any urgency. So if the numbers come in positive, they wouldn't need to cut rates. If they saw weakness, they would cut rates to boost the economy. So how did it impact the market? Stocks and indices rallied. The Nasdaq went up 0.7%. S&P 500 gained 0.5% on cut reassurance. Gold surged 0.8% on lower rate vibes, and USD weakened 0.4%, USD gained 0.4%, and GBP USD gained 0.3%, while the USD JPY lost 0.5%. So that's it for Tuesday. Let's move to Wednesday, September 24th. So first we had the South Africa holiday, which was the Heritage Day. So congratulations to whoever is from South Africa. No major movements on the market for this reading. Then we had the US President Trump speak again. He reiterated the anti-globalism themes, emphasizing national sovereignty. So it's similar to the prior UN address, criticizing UN's role in peacemaking. So what does it mean? It echoes trade war risks, but no fresh announcement. So the market shrugged as more of the same. The market impact, stocks, mild dip, Dow lost like 0.2% on uncertainty, but quickly rebounded. The gold gained 0.3% as a hedge against uncertainty. The USD gained 0.1%, the euro lost 0.1%, GBP USD stayed flat, and USD JPY gained 0.2%. The next one was new home sales for the month of August. The previous reading was at 664,000. The forecast was a slight drop to 650,000, but the actual came in higher than both at 800,000 new home sales. So what does it mean? It means that this is a massive beat. Sales jumped 20%, 20.5% to a 3.5-year high, driven by lower rates and inventory drop, which signals housing rebound. The market impact was that stocks and indices, mainly like the home builders stocks, rallied. The S&P 500 gained 0.6%. The Nasdaq gained 0.5% on consumer strength. Gold dipped 0.2% in risk on shift. FX majors, mainly like the USD firmed or gained 0.3%, Euro USD lost 0.3%, GBP USD lost 0.2%, while the USD JPY gained 0.4%. And finally, we had crude oil inventories on Wednesday. The previous reading was at minus 9.285 million barrels. The forecast was 800,000 barrels, but the actual reading was at minus 0.607 million, which is like 607,000 barrels in shortage. What it means, it means that small drawdown, less inventory buildup than expected, which is bullish for the oil. Demand holding, supply is tight, and like it is like mildly bullish for the oil because it's not very far from the forecast. What else do we have? Wednesday, it's done. So let's move to Thursday. Thursday, we had the Swiss National Bank interest rate decision for Q3. The previous reading was at 0%. They forecasted 0% as well, no change. And the actual came in line with the forecast, which is 0%. So what does it mean? It means that the Swiss National Bank held at zero, so zero rates, zero interest rates, which is a dovish stance to combat low inflation and strong franc. No surprises there, so it didn't move the market much, but I believe, other than that like trying to combat a low inflation. The Swiss franc is gaining strength because it's considered or it's looked at recently as a safe haven, just like gold, for example. So amid the tensions that are happening around, I believe that's what made the Swiss franc gain more strength. Plus, add to that the weakness we saw in the US dollar recently. So all of these, alongside of course low inflation, caused or like the Swiss franc to strengthen against the dollar. Okay, so the market impact was Swiss market index went up 0.2%, minor US echo like the S&P gained 0.1%, that's it. The gold stayed neutral, and the USD CHF gained 0.1%, so nothing major mainly. Let's move to the next one, which is the durable goods orders for the month of August. The previous reading was at 2.7, minus 2.7%. The forecast was at an improvement at 0.3%, but the actual number came in at a whopping 2.9%. That's a massive, massive beat to the expectations, okay? So what does it mean? It means a huge surprise surge. Business investment rebounding like planes, machinery, signaling manufacturing pickup despite tariffs. How did it impact the markets? Industrials went up 0.7%, the Nasdaq gained 0.6%, gold went down 0.3% on growth optimism. FX majors, mainly talking about the US dollar, it gained 0.4%, the Euro USD lost 0.4%, the GBP USD lost 0.3%, and the USD JPY gained 0.5%. The next one was the US GDP for Q2. The previous was a contraction at minus 0.5%. The forecast was 3.3, but the actual beat expectations at 3.8% growth. So what does it mean? It means a massive, massive beat. Economy roared back from Q1 contraction, fueled by 2.5% consumer spending boom, which crushes recession fears. Now they're not as fearful as before from the recession or from a recession happening because growth is positive. The inflation is under control, and the jobs market is improving. So the recession fears were crushed after this number. In terms of stocks and indices, it was on rally mode. So S&P gained 1%. The Dow gained 0.8% to records. Gold fell 0.5% as strong data tempers cut bets, which strengthens the dollar. The USD surged 0.5%, while the Euro USD lost 0.5%. GBP USD lost 0.4%. The USD JPY gained 0.6%. So the initial jobless claims, the previous reading was 232,000. The forecast was a slight increase of 1,000, so 233,000 jobless claims, but the actual came in better than both at 218,000 jobless claims this week. So it's better than expected. Fewer filings, fewer people are claiming to be jobless, down from the prior, easing slowdown concerns. How did it impact the market? The stocks and indices were positive. The Nasdaq gained 0.4%, the gold lost 0.2%, while the FX majors, mainly talking about the USD, gained 0.3%. The next one is existing home sales. The previous was 4.01. The forecast was 3.96. The actual came in better than the forecast at 4 million existing home sales. So what does it mean? It's a slight beat than expectations, but it shows that sales are steady despite high rates with inventory up, which means the housing sector is stabilizing. All right. How did it impact the market? Home stocks went up 0.5%. The S&P went up 0.3%. The gold stayed neutral. The USD had a minor lift of 0.1%, so nothing major, but the home builders or the home stocks, sorry, went up 0.5%. So let's move to Friday now, 26th of September. We had, so guys, here we have a small typo. This should be a PCE price index instead of core. So this one is correct, but this one like needs to be minus the core. Okay. So the core PCE was the previous was at 0.2%. This is also a typo. 0.2%. The forecast was 0.2, and the actual came in at 0.2. The PCE, the headline, not the core. The headline, the previous was at 2.9%. The forecast was at 2.9%, and the actual came in at 2.9%. So what does it mean? Let's start with the core inflation. Um, um, it means, like, let me remind you that the PCE is the Fed's favorite inflation gauge, okay? So it's steady at 2.9%, showing this inflation on track, but sticky above 2% target. The market impact was that stocks were up on not alarming vibes. S&P gained 0.5%, the Nasdaq gained 0.6%. Gold flat, maybe it gained like 0.2% as cuts remain in play. USD was mixed. Euro USD gained 0.1% and GBP USD stayed flat. Let's now move to the monthly core number, which is the previous was at 0.2, the forecast was at 0.2, and the actual came in at 0.2. The monthly rise is on target, consistent cooling with headline up 0.3% from spending, so no Fed alarm. How it impacted the market, the stocks and indices were positive. The Dow went up 0.4%, the gold went up 0.3%, and the USD lost 0.2% on tame inflation. Because inflation, this shows, because it came in line with expectations, this shows that the inflation is under control, okay? What else do we have? That's it for the economic calendar. Now, let's recap. The big picture was USD data crushed it. GDP, home sales beats, low claims. Everything is doing well in the US economy with tame PCE. So the economy is hot, inflation is managed, and Fed's easing path is clear from Powell. Trump's rhetoric adds trade noise, but no bites yet. The market vibes were as follows. The stocks netted 2% weekly, the S&P at an all-time highs on growth hype. Gold gained 1.5% amid uncertainty. USD was up 0.5% against all majors on exceptionalism. All right. So I hope you enjoyed this one and found it helpful. This is it for today. Thank you for watching, and don't forget to drop your questions in the comment section below if you have any. I'll be happy to answer. And as always, trade responsibly, take care of yourselves, and bye bye.